What do you imagine when someone tells you that they're making $10,000 a month? You're probably thinking of a business owner or a doctor who has studied for 8 years to achieve such a salary. Well, you think like the 99% of the population because there is an investment method that can provide you with that kind of income and never work again in your life. You only have $1,000 in your pocket right now. No problem, let me introduce the dividend stocks. This type of income is called passive income because it is an income that you earned with little or no effort at all. But it's a method that takes a lot of time and a lot of knowledge to get to a point where you no longer need to work and you live on your investment. The last thing before we start, if you want to start investing in dividend stock yourself, make sure you stay to the end because I'll show you a method that you can start when you're ready. What are dividend stocks and why invest in these kind of stocks compared to others? Well, first of all, what is dividend stock? A dividend stock is a method of distributing profits by a corporation to its shareholders. When a corporation earns a profit or a surplus, they have two choices. One, they can take that money generated by these profits and reinvest it into the profit to evolve their business. And two, they can decide to pay a portion of the profit in the form of dividend to shareholders. And that's what interests us in this video. Dividend stocks are becoming increasingly popular over time because they allow investors to benefit from the passive income that stock offers over a long term. Now, why invest in these stocks? Well, dividend stocks have historically outperformed the S&P 500, which is the index of 500 most popular stocks in the United States. The risk rate is therefore lower than the economic index most trusted by investors, which proves the power of these types of shares. Also, companies that allow themselves to pay recurring dividends to their shareholders are often companies that tend to have good cash flow balances. They can be considered financially stronger than those that do not. This is a safer investment because shareholders have more confidence in the financial situation of a company in which they invest. Dividend stocks have the particularity of allowing investors to benefit from two sources of income, which differentiates them from the others. The first one is like every stock by appreciating the share price. But the second that differentiates it and that popularized it to investors is by the distributions made by the company. Investments of these investors will therefore be less affected during an economic downturn because they are always insured by the dividends paid by the company that others will not have, which often makes them preferred by investors with low risk appetite. Before I show you a list of the best dividend stocks, I would really appreciate if you consider subscribing to the channel if you have learned anything about the subject since the beginning of the video. It'll take you barely 10 seconds of your time, but it'll be very much appreciated because every week we put a lot of effort into entertaining you on a topic about finance, and don't forget to click the bell that will alert you to news and new videos of the channel. Now, let's get back to the video. Best dividend stocks to hold long term. Now, let's talk more concretely. Now, in which dividend stock should you invest? We must first choose companies that we personally trust in its potential to evolve. Because despite everything, we first invest in the company because our values are consistent with those of the company. Because if you don't trust it, your chances of using it and making money are significantly reduced. Also, an important factor that many investors tend to make a mistake to choose stocks with the highest percentage of dividends, which can negatively influence your decisions and values towards the company. This phenomenon is called the dividend trap, and you absolutely must avoid it. The more you see the dividend percentage of a low stock, the more companies reinvest in their businesses, which is a very good thing for the investors as well. The first action, which is one of the most trusted as financial situation of a company, but also by its high dividend percentage, is JP Morgan Chase & Co. They pay a 3.75% dividend to their shareholders each year. This means that you will receive 3.75% of the current value of the share when you receive their benefit, and this annually. The company is financially very well established, having in their possessions $1.7 trillion in liquid assets. And yes, it is a trillion with a T, which $700 million of its cash. So I personally think that this action is worth the cost of being analyzed in detail because it has a lot of potential in the future. The second action of this list is PepsiCo. Now, we all know this giant of beverage distribution, but several people do not know that this giant also owns Gatorade and Frito-Lay, which are both equally well financially established and can reassure an investor. This share offers a 2.73% dividend to its investors each year. For the current price of the share, the investor would receive approximately $4.50 off the share that they own. Paradoxically, the third action on my list is Coca-Cola Co. I say paradoxically because these two companies are constantly competing in the field of distribution of soft drinks. PepsiCo owns Gatorade, and Coca-Cola also has a fairly established brand in consumer consumption habits, Powerade. Here are some examples of the products that Coca-Cola Co. has that might as well surprise you. Now, Dasani Water, Fairlife, Fanta, Minute Maid, Peace Tea, Simply, Sprite, Vitamin Water, and many more. So if its products speak to you more than its respective competitors, the Coca-Cola Co. share would be a considerable purchase, knowing that it also offers dividends of 3.04% annually for each share. Now, I present you two stocks that are very well established in the stock market, but that pay dividend percentages slightly lower than its competitors, but that can be trusted by its shareholders because of their status in the market. So Microsoft Corporation is the fifth action on my list. The fairly globally recognized company is hard not to trust due to the evidence that they have demonstrated throughout their history within the technology. Microsoft is often considered by investors not for their dividend because the latter offers only 1.15% per year for their shareholders. However, if you have the confidence in this company and its future technological advances, it could be a justifiable choice. The second stock with fairly low dividends is the Walmart Inc. share, which is also fairly well known for the people's diversity. The stock offers around 1.71% in return to their investors each year, which can be interesting knowing that it is consumed daily by many people. The next step is now to get started. Starting now. With this strategy, the most important thing to get the most meaningful profits is to start as early and as quickly as possible. Indeed, the profits are going to be much greater if the investments are able to generate revenues themselves. This is called compound interest, which is one of the most widely used tools in finance because it allows your money to make even more money. So, here is a technique that will allow you to start your dividend investments as soon as your next pay. I know that most of my audience are young, and all to your advantage is an opportunity that will allow you to retire with more than $1 million in your name, which is stratospheric. The first step in this strategy is to take your next paycheck and choose a percentage that you allow yourself to lose, because the goal is no longer to touch that money until retirement and let the compound interest from it to do its job. As soon as this percentage is established, choose the dividend shares in which you want to invest and put the amount previously decided each week or month according to your preferences. This will become a habit which will greatly help for your regularity. There are great apps which can allow you to invest a regular amount according to your means, like Robinhood, which is a great app for beginners. I'll leave a link in the description if you are interested and you want to start as soon as possible, which I slightly suggest you do. You can always adapt to the market and entertain your purchases so that your portfolio evolves as exponentially as possible. Now is your time to act. The longer you wait, the more opportunities you will miss. So, take action now.